So hello friends, welcome back to Windroid. So today we are going to see an exciting sheet called financial ratio analysis. I have named the sheet like financial ratio analysis using GPT because this particular sheet will give the inferences through GPT, through artificial intelligence. So I'll show you very much in detail about the sheet. Let me tell you what is the objective of the sheet. So if there is a company and it has to see how its financial ratios work, tell you more about financial ratios, let me come back to this particular thing. So I'll just submit. So there are 5 parameters in which the financial ratios of a company are actually classified into. That is called the solvency ratio, the profitability ratio, the liquidity ratio, the efficiency ratio, and the balance sheet concept. So there are 5 concepts or 5 basic classifications in which the financial stability or financial status of the company is being evaluated. So the financial department or the finance department of every company of various tunes, whichever like whatever big the company or small the company or medium the company is, they all look into this at any point of time. Some of the companies does that on a quarterly basis, on a half yearly basis, but most of the companies, small companies especially, do it on an annual basis. So it basically calculates the income statements on one part. So what is the income statement of the company? Then it will calculate the balance sheet. That will be like what is the total assets of the company minus the total liabilities. So that is one part of that, that is the balance sheet and the income statement. Then it comes to the financial ratios. So there are about 24 financial ratios. So that is all classified under the basic 5 parameters or the 5 classifications, that is the solvency, profitability, liquidity, efficiency, and balance sheet. So if you can see that OPM, PBT, PAT, that's all part of the probability ratio. If you can see net worth and working capital are part of balance sheet concept. You can see interest coverage ratio and current ratio, that is part of a superset called liquidity ratio. So it all comes under this particular 5 basic classifications. So how we will come to this is basically because we are inputting into a lot of cells here. So we have created a sheet in which we have kept a space for input. So input is where we basically put all the input details, and the Excel, all the formulas are created in such a manner that it creates and calculates the outcome. Okay, so I'll take you more to the sheet. So here you can see what is the gain point and the pain point. So we are basically analyzing the year-on-year performance between 2 years, that is 2020 and 2019. So what happens is that, so you can see wherever it's green, green shows that the year-on-year the ratio is higher when compared to last year. So here also on the Sparkline graph, this is Sparkline graph, which actually shows that on 2020 and 2019, the comparison which shows that 2020 it is much higher. Okay, wherever it is, this is lower, and that is the debt to equity ratio, and that is lower when compared to 2019. And this is also lower, like creditors turnover ratio, that's also lower. But you can see that we have calculated the number of gain points in which the year on year it is showing a growth, and pain points are nothing but the year on year it is showing a degrowth. Okay, so we'll see how it works, and extensively I will make you understand on every single 5 concepts that is mentioned, that is the probability ratio, balance sheet, liquidity ratio, solvency ratio, efficiency ratio. On all these 5 basic concepts or the main concepts, so we can just filter it out by pulling this drop down. So if you want to see much about any of these aspects, you can just pull down. So if you want to see efficiency ratio, so it is all these aspects. Okay, so on this sheet we do a lot of things, and then we go to the sheet 2 where we take it to a print. So you can take a print out of this. So it basically does is that whatever the 24 ratios which is coming as an output, that is sorted based upon the financial ratios in the increasing order. So first comes B and the last comes S, something like that. So we'll start with the sheet. So what we'll initially do is that we'll create a cell, a table like this, and then we will put all the inputs like this, and this is the input. So all the gray cells that mentioned here, all these gray cells mentioned here are inputs, and the other cells are calculations. So you only have to input wherever the gray cells are there. So I mentioned input cells here, so this is where you input. So the main inputs will be like net sales. If you come to the income statement, will be net sales. The other income will be the total net sales and other income, that will be total sales plus the particular income for the company. So income is totally added, so this is an added form, this is a calculated formula. Then the total expense that we mentioned. Then we come to the EBITDA, which is actually the earnings before interest, interest deduction, depreciation, tax and amortization. So we come to this, and from EBITDA, which is basically the net sales plus other income minus total expense, then we reduce the interest, the depreciation, the tax and amortization. So we reduce here the depreciation and we reduce the interest here. So so we come to something like PBT, that is profit before tax. Then we reduce the tax, and then we come to the next PAT, that is profit after tax. So this is the income statement. So we just compare it for 2 years. So we put data wherever it's required on these 2 years. So this has to be specific and exact, and then we will get the net profit on these 2 years. Okay, so I'll also calculate a percentage here. So I calculate a percentage here. I'll tell you what is all about. So wherever any of these parameters come, okay, so if I just want to say that what is the PBIT or the PBT for profit before tax is 96.27%, that is calculated on the net sales. Okay, so if you can see that the formula here C14 by C6, that means that for each and every of this percent is actually benchmarked against the net sales. Okay, that's what how companies does that. So if you can see that the PBIT or PBT is 96.27% of the net sales, that is how we have to read that. So if other income is just 0.04% of the net sales, that is why it is 0.04%. So this is net sales is again C by C6, that is absolutely like you are dividing net sales by net sales. So you put a formula like you just need to select the C7, that is the value here, and divided by net sales. Here also we divide you get this formula by dividing the total expense divided by the net sales. Okay, that is minus 4.17%. So basically we do that, and that is how you get the income statement, and you also get the percentage wage calculation, which is actually setting up a benchmark against the net sales. So that is very clear. So you can see that the 96.12% is net profit, and net profit is 96.12% of the net sales, and the total value is 282 lakh, I mean 2,82,130. That is how we read that. So that's the income statement for you. I have protected these cells. So basically in sheets that we use a formula called data and protects ranges. So how we do that is that you can see that I have actually added ranges for protection. So all these cells will be protected. So anybody who is inputting data into this sheet, they will only be able to edit these gray cells because this is unprotected. So what I have done is that so I'll just show you how to do a protection. So you just go to data, and then you go to protect sheets, and you add a range or a sheet for protection. So basically if you want to input protection to a particular cell, then you use sheet and just click on sheet, and you can select which sheet that you want, and then you can just put this arrow, select this except certain cells, and then you select the cells which need to be unprotected. Okay, so I have just linked the cell like C1, this one. Okay, so H3 is a range that has to be protected. So I'll tell you how it works. So okay, then you set this, and now what happens is that I can set permissions. Okay, so what I set the permissions, let me just go ahead and set the permissions. You can change permissions. So you can change it to any person that needs rights to change the formulas. So rest all will not be able to do that. So you just click the tick and then click done, and the person who is shared the sheet and who needs the rights to change the formulas, he will be only given the access. Rest all will have the access only to edit only on the gray cells. So that is how it works. So you can see all area where the gray cells are mentioned, it is all protected, so I use this. So just see like E13, that's E and 13, so this is protected. So like that I just selected each and every cells and just put the protection, so that on a range where the people input the cells, they will be only able to edit cells that have the gray areas. Okay, so that we protect the sanctity of the sheet, and you don't touch on its integrity. Okay, so that is what we do. So now we will come to the balance sheet. Balance sheet has nothing but the total assets and the total liabilities. So here we are coming with the total liabilities for the company initially, and then the total assets. So here also the gray cells has to be edited. So you can see we have put equity, reserves, shareholders funds, your non-current liabilities, creditors, other current liabilities, and the total liabilities. Okay, so total other liabilities to be mentioned. Okay, total current liabilities. So the total liabilities is 12,084. So it is just adding all these cells. So what happens is that the shareholders fund is nothing but equity plus reserves. So that is the formula for shareholders fund, and that's it. Like I mean, the current liabilities as a total will be sum of non-current liabilities, creditors, and other current liabilities. So that is what. So again the percentage is calculated. So C27, it is again calculated on the total liabilities. So say for example the current liabilities is 5.67% of the total liabilities. The reserves are almost like 86.79% of the current liabilities. That is how we read this. Okay, so there it is benchmarked against the total liabilities. Here the total income statement, all these line items, all the row items, all these things are actually benchmarked against the net sales. So here it comes to if we talk about the liabilities, it's total, it's always benchmarked against the total liabilities. All the row items will be benchmarked against the total liabilities. And now total assets, we got net current assets, inventories, trade receivables, cash and equivalents, other cash assets, and total current assets, others, and all add ups to 12,084. So the thing is that you want to add any particular line item, you can add it here also, not a problem. So it actually calculates the total. So here also you can see the percentage. So it is actually valued or benchmarked against C34, and that is total assets. So if I want to read this, the total current assets, it's almost like 81.03% of the total assets. That is how we read. Or the trade receivable is almost like 0.4% of the total assets. So how we read this, and we also mention for the earlier year, so that we actually calculate that also. Okay, and in the balance sheet we do the main thing, like what is the total assets minus liabilities. Here I have put the formula like minus, so you can see whether the assets are more than the liabilities or the liabilities are more than the assets, and you can just compare last to this year how is the balance sheet working like. Okay, so having completed this, we will come to the main part, how to analyze the ratio of a company based on various parameters. So as I mentioned, these are the main classifications, and these are the sub classifications or the subset, and that is almost like 24 formula ratios. So how to calculate ratio, the formula is mentioned here. Okay, it only, what it does is that it just divides the cells, that's it. Okay, so where it's required, it divides the cells. So that is as explanatory on that same. And you can see that it is calculated as a percentage in some cases. So for example, net worth is calculated in crores, working capital is calculated as crores. The current ratio psi neutral is calculated against 1. I mean, that is the unit. So that is, see like how it is compared against this value called 1. Okay, debt to equity ratio 1 is maybe, so that is the value, and let's see how it is actually valuing against the 1. Okay, here it's percentage wise. ROE, return on equity, and return on capital employed is basically on percentages. Fixed assets turnover will be on times, so you can see that 3.77 times. Okay, so that is how we read that. And average payment period will be calculated in days. So wherever you set the unit parameter, that's all mentioned here. That is self-explanatory here. And so we just work out the formulas here. So here you can see that we can see a conditional formatting here. So wherever the probability ratio is here, so you can see that it is giving a green color, right? So I am just changing this. So this is liquidity ratio. So if I change it to efficiency ratio, you can see that it changes, right? And if I change to balance sheet, it changes to another color. So if you have solvency ratio, it changes to another color, right? So if I want to liquidity ratio, it changes to another color. So that is how the conditional formatting works here. I'll just share you how to do that if you're not aware. So just click on this, and if you can see, just go to format and conditional formatting. So here you can see that I've given conditional formatting for 4 specific categories. So what it says that if the text contains, so I have just selected the entire range here. Okay, so this is the range. So n6 to n30 is the range, and I also added one more range, that is I36. So that is where this particular validation or the conditional formatting works. So if the text contains profitability, it will go green. So I just click here and can change the colors also, and that is how this turns to green, the profitability indicator, because it's having a text called profitability, right? So that's it. So let's see another formula called efficiency, that here we are applying the range to these ranges, and then we are using the format tools like text contains efficiency, then it turns to blue. That is how it is done. So we have seen all the 4 formulas, right? So except for solvency ratio, which remains as white, whereas here all changes to different colors. So if we change this also, the color of the background changes, right? So here we have seen, we'll see how a Sparkline chart works. So we'll just put some time on here. So the syntax of Sparkline graph is that you just select the data. So here I have selected data of these two. So Sparkline graphs gives you data output or visualization on a particular single cell. That is the beauty of it. So we are selecting the data and a comparison between 2020 and 2019. So here we are comparing 2020 to 2019. So that is what our objective is, that, and we are selecting the chart type as bar, that we can change to line or win, lose, or something like that. So we can change it. Here we're using a bar, so that only makes sense. And so we are taking the bar as here, and we are setting markers here. That is not as of now required, so I can just remove that. So okay, I'll just keep it as it is, because there's no markers here. Okay, so we are just mentioning the data here. So that is the reference of the data, and then we are opening the curly brackets, and we are mentioning whatever parameter is here, we can mention here, and just set the attribute here, and what is the chart type, and just set the type here. That's it, and close the curly brackets and close the brackets as a whole. Okay, that is how you. And here what I've done is that I just dragged that formula here. So if I just drag the formula, the same thing affects, right? So this shows the comparison, direct income comparison, that on this parameter called the OPM, how is it faring against last year. So you can see that last year it is negative 26, and this is 95. So the thing is that it is almost like 363% of growth is there, and that is why it's showing. So as it's negative, that's showing a negative signs. But again, you just added the or divided the 1920. We just added L6 by M6. So we have just divided 2020 by 2019. Just a rough formula here. So you can see that it is showing a growth. So that is why it is showing beyond the 50% of this particular parameter, right? So that is how you create Sparkline graphs. So let's come to the formulas. Formulas are here, and just for example, we are looking at the working capital. Working capital is equal to current assets minus current liabilities. So here it is like C33 minus C26. So let's come to C33 minus C26, C33, okay, minus C26. So just reducing these two cells, so that will give me the answer. Okay, so that will be the answer of the working capital that is available. So all the formulas are here, and you can just click here and understand where we are connecting to the various cells, so that we can get the formula. So if we want to see the debt to equity ratio, that is basically the long term debt divided by equity plus reserves. So let's see how the formula, from where it captures, it's C23 and C22. So this is what, so C23 and that is the net current non-current liabilities, and divided by C22 shareholders fund. So that is the formula that we employ here. Okay, so to understand what is the debt to equity ratio, so you can see that it is 0.02, and that is lesser than compared to last year. So all the formulas are here, just pick and choose and here, just because we are very extensively and descriptively mention how it works, and it just calculates or connects to the cells wherever the relevant data is here. So here you can see that we have added C27 plus E27 divided by 2. That is basically we are looking at the average, right? So wherever the net worth is there and the debt fund is there, we are connecting to that particular cells, and then we are dividing it by 2 so that we get the average. So average is basically the average of two numbers, adding it up and dividing by 2. So the length of the total investment will be 360 divided by capital turnover ratio. So that is valued against a unit called days. So here we are dividing this C20 365, that 365 is the number of days, and then we are dividing by L27. So L27 will come here only. Yeah, as the total capital turnover. So we just divide the number of days in a year divided by total capital turnover. So that will give you the answer. Okay, that is the length of own investments. So all the ratios are here. So this is the superset, or this is the main classification, and this is the sub classifications, and you can get all these reports here, right? So again, what I have done is that I have understood the gain points and the pain points. So gain points will be like wherever year on year it's a growth, we mentioned that it's a gain point, and wherever the year on year growth is degrowth, then we mention as a pain point. So how we'll do is that we actually have created a formula here. We have created a conditional formatting here also. So let's see how the conditional formatting here works. So here you can see that green is where it is on a year on year growth, and red is there where it's on a year on degrowth. So format conditional formatting, here you can see that we have created a custom formula. So earlier we have used a formula like text contains. So here you have a custom formula using a custom formula, and what we say is that if L6 is greater than M6, okay, then it will be green. So what we say is that if L6, so okay, so this 2020 the year, this particular value is greater than 2019, then it show green. Okay, so we close it with a dollar sign also, so that we take this formula to the entire row or the column below. So that is how it is done. So we just select the green here and just click done. So that is how it calculated, or it actually changes the color, and it changes as per what is there on here, right? Whatever it is lesser, it will show red also. So here the custom formula is red because the custom formula is L6 is less than M6. So that means that here, if you can see, the debt to equity ratio of 2020 is less than 2019. That is why it is showing red. Okay, so here we have seen the formula for conditional formatting. So here in this sheet we have coming up a summary telling that how many gain points and pain points are here. Gain points are points obviously where the year on year growth is a growth, year on year it's a growth, and pain points is when it's a degrowth. So we have used a custom formula called sum colored cells. So it is there available as an add-on from in Google Sheets. So you go to extension and you click on add-on and search for number text, and then you add it on. So it will then come here. So here it's a number text. So you just click on number set, then it will be activated. Otherwise, by default, this particular formula is not there. I have created a video on that before also, so you can check there to understand what is more about the number text formula. So here you are using the sum colored cells. So you are the count colored cells. So you're counting the cells wherever the color is H31. So wherever the color is green, and the range to calculate is basically H6 to H29. So that is where the range you calculate the count for, and that is for the color green. And here again the same formula where we actually calculate or sum or count the number of cells that is containing the red color or pink color. Okay, so here it is this automatically changes based on the color that is changing here. Okay, so that is how we found out this particular part of the sheet, and now we will come to the next aspects. So here it is all like it is all jumbled up, right? So it just it's very confusing. You can just you may not be able to make it out sometimes. So what if we want to see the data of any one parameter alone? Okay, so we have checked the parameters here, so we need to only understand what is the detail based on a particular parameter like balance sheet concept. Okay, so what I have done is here to create a drop down, what I have done is I have created the data and just validation, just very simple formula. So what I have selected is the range. So this is the range where I need this particular drop down here. So what I have done is that I have selected drop down from a range, and then what I have done is I have selected the range. The range will be nothing but it is here. Okay, so that is S5 to S9. So this is how it is. So I just selected and I click done. Automatically what happens is that drop down activates. So I need the balance sheet concepts alone. So if whatever I need, I can just pick and choose. So here I used a formula called filter. So filter is basically a function that we use a lot for getting filtered data. So what I have done is that here the syntax comes like you select the range and then you select a particular column that contains a particular text or a string. Okay, so what I have done is that, so the concept is very simple. So I have filtered this particular data because I don't want all these to be shown at a time because it's confusing for me. So I have selected the range, and that is this range. So that's come from here to here. Okay, so that is the range. And then what I did this is that, so this particular column is there, right? So in this particular column I need to filter this whole data based upon this particular any of this what is selected on the drop down. So here it's syntax. So I will select the entire range and this particular column. So I select the entire column. So I should be very specific on the column numbers and the row numbers. So I have selected I6 and N9 and 29. The same way the column should be also that particular single column, that is N6 to N29. So that comes here, right? So and that is equal to I36. So I36 balance sheet. So what it does that it just filters the entire sheet based upon the value on this sheet, and that will be coming from I36, and that is balance sheet concepts. So as simple as that. So it just filters, just does a filter. So you can see that if we just look on these two concepts right now, so this is less confusing right now because I can just work on these two concepts, because this is a two particular input or two particular ratios that is connecting to balance sheet concepts. So you can see what is the last year to this year and how it is going like. So last year to this year it is a growth only because this is more than half of the graph. And see, I can create a formula using a GPT. Okay, so let's come now to how I created a formula here. So I asked the question. So what I've done is that since I use the filter function, so I am using this formula only when and wherever required. So if this particular I38 is blank, I don't need to calculate the formulas here, right? So that is what I initially want to see. Otherwise it will throw error because this is there is no data here and there is a formula open here and there is no data here, then it will show an error and that will not make the sheet look clean. So I have put a reference here is that if I38 to I, so whatever is there on this particular column, it's blank, then it should be blank. So this formula should not come out, or there should be blank. But if it's else, if else, what will be the outcome of the company having, and I'm just adding this particular I38 also. So what is the outcome of the company having I38? So what is I38? Net worth. So for GPT it will read like what is the outcome of the company having net worth, right? So here it will come like what will be the outcome of the company having I39, that will be working capital. Okay, so that is a question that we ask. Okay, so we come to the question, and so I'll slide this. So we'll come to the question and then we will ask GPT. So again here also we put that this I38 if it is blank we don't calculate the formula itself. So wherever so this is blank, so it shan't go error here. So here we have shown that if something is there then we'll calculate the formula, otherwise we won't calculate the formula. Okay, we won't show the formula itself. So here what it says that if I38 is to I is blank, then again blank, then we have GPT and BGPT will actually calculate the prompt. So prompt is already, we have created a prompt like what is the outcome of the company having whatever is here, right? So whatever is here, so that is net worth and working capital. So the question is asked here or created here like GPT, what is the outcome of a company having net worth equal to L38. So here the answer is, the question is 11135. So it will answer the outcome of company having net worth of 11135, that is 1,11,335.52, and it's a positive financial position. That means that the company assets are exceeding its liabilities, indicate the value that this value and its financial stability. A high net worth generally indicates a stronger financial position for the company. So that is the GPT outcome. And if the working capital, that is current assets minus current liabilities, is 1570, so GPT is asking a question. We are framing a question that what is the outcome of the company having a working capital of 1570. So the answer is will be would be depending on various factors such as size and nature of the company, but our in general having positive working capital indicates the company has sufficient current assets such as cash, accounts receivables and inventory to cover its current liabilities. So you can see that working capital is nothing but current assets minus current liabilities. Since it's positive, that means that the assets are exceeding liabilities, so hence it is in a good financial situation. So that is created by GPT, right? So you can just change that formula to something else, like you need to see what is the solvency ratio all about. Okay, the solvency ratio, okay, that is only one point, that is debt to equity. So the formula will be long term debt divided by equity plus reserves. So GPT will, the answer is that the outcome of the company having a debt to equity ratio of 0.02, it's not clear with additional information. Debt to equity is a financial metric that company's total debt to share of equity. However, the interpretation of the ratio depending on the industry, it suggests the company is less reliant on borrowed funds. So it is not, we have seen a positive sign, it suggests the company is less reliant on borrowed funds. So company is not too much focusing on borrowed funds, so it is making the revenue by itself for its running capital. So that is an interpretation. So you can see and change it as per required and just understand it yourself. So you can use your inferences, but GPT will give its own references. So if you feel that GPT suggestions are valuable, so just rely on that. Otherwise, look into other modes just for understanding of how GPT can give you analysis of your information. Okay, so I'll just take you another sheet also. So here we have got a more cleaner sheet, because you need to take a printout and give it to your finance manager or whatever person requires this sheet for, or you can just send or mail it. So what I've done is that I used a sort formula, sort formula, and sort, what it does is that it is selecting the sheet range, and what it's doing is that it creates a sheet that is based on a column that you specify, and that is in ascending. Okay, so what happens is that I have selected the sheet, and that is nothing but the sheet here, okay, the range here, and then what I've done is that I have told sheets that this particular range, that is N6 to N29, has to be ascending. Okay, so N6, so this is the column, so this is basically N6, so this has to be sorted in ascending. So what happens is that it sorts in ascending, right? So this you can just go ahead and select this and just go ahead and file and just email or download or whatever things that you want to do. Okay. Finally, on the summary from GPT, so what happens is that I have created a formula like this, that is the AI summary of the company. So I have used a formula called GPT summarize. So it is basically there on the GPT add-on. So this particular formula called GPT underscore summary, and I have selected the data that is U4 to V28. Okay, so let's see what is that. So it is basically this data. So I have actually organized only 2 columns here, which will give me an output and which will prompt GPT to give me an output. So what I've done is that this basically comes from I6, and that is here, and this comes from the value that's come from here. Okay, so I just need only these 2 values. Okay, so I just put the cell reference and the drag that. Okay, and then what I do is that I go to GPT summarize, I select the data here, so that is U4 to V28, and then I ask a question like give inference in bullet points. Okay, that is what I want a summary as, so it creates a summary. So that is the summary based upon the data that is put in here. So the company has high inventory turnover ratio, low average inventory holding period, indicating efficient inventory management is good. The company has got short length in operating cycle, including quick conversion from inventory to cash. So what all summary that GPT can provide from your data, that will provide. Okay, so this will be more helpful. So it not only calculates, so this sheet is a very comprehensive sheet, so that not only calculates the various different ratios, 24 different ratios from 5 different basic classifications, and then it gives you the output given by the artificial intelligence using Chatgpt, and it also gives a full AI summary, and it even helps to give a output or a printout. So hope this particular video gave you an idea of how the financial ratio helps in organizations to analyzing its financial health. So I'll just share the link of this particular sheet on the description box, so that you can just save that, or you can just save as a copy basically, because I am just giving a view rights to you. So you just go ahead and save it as a copy and do it yourself, whatever that you can feel and what you can add it to. And if you like this particular video, please put a like, and if you need any other friends to actually share it to, please do share it, so that they can utilize it whatever if they need to. So thanks for watching this video. Have a good time and all the best. Thank you.